What is seller financing? Seller financing is when you get a mortgage to buy a home from the home seller instead of a bank. Let's review when this approach is suitable, as well as pros and cons for buyers and sellers. When to use seller financing. Seller financing is rare overall, especially in a hot real estate market where sellers have their pick of buyers. Seller financing becomes more common in tough real estate markets when bank lending tightens up and/or buyers have been hit by hard economic times that make it difficult to qualify for a traditional bank loan. For example, if someone was selling their home for $300,000 and only owed $30,000 on their existing loan, they could require a 10% down payment from a buyer to do seller financing. That 10% down payment would pay off their $30,000 loan, and they could do seller financing for the remaining $270,000. If, on the other hand, they owed $150,000 on their existing loan, the buyer's 10% down payment would only pay their loan down to $120,000, so they'd need their lender's permission to offer seller financing for as long as it took them to pay off the $120,000. And it's extremely rare for a traditional lender to grant this permission. As for when buyers should use seller financing, the most common reason is that a buyer might not qualify for a traditional bank loan. Pros of seller financing. Less stringent loan approvals. Even the most sophisticated sellers are unlikely to subject a borrower to the same rigorous federally required loan approval procedures and documentation banks use. No mortgage insurance for low down payment deals. Most bank loans with less than 20% down require mortgage insurance ranging from about 0.45% to 1.05% of a loan amount. Cons of seller financing. Buyer unknowingly can assume seller risk. If the seller has liens or other claims from creditors in title that the buyer doesn't know about, or even the seller doesn't know about, the buyer could inherit these obligations as the new owner. Less organized monthly payment processing. With seller financing, it's harder to do auto payments, and also you might not receive monthly payment statements and loan balance updates reliably because a private lender won't have a systematic billing process like a bank does. Tips when using seller financing. Don't try to save money by not using real estate agents or lawyers. Buyers and sellers must have professional advice to protect their individual interests.